Hi, this is Joe Rabil with Rabil Stock Research. So we're going to start the show out talking about MACD and something pretty important regarding the MACD crossover signal. I want to explain this in detail and what things I use to help with the importance of this signal, when to ignore it, what to look for, that kind of thing. And then I'm going to give some specific examples that are taking place right now and some big name stocks, including NVIDIA and actually what's taking place in Bitcoin right now. Once we get through that, I am going to go through and look at a few indexes, and then we're going to go through the symbol requests that came through. Let's go ahead and get going. Looking at the SPY, I've got the weekly chart on the left and the daily chart on the right. All right. Now, there's a couple factors that I think are important here, and I want to just keep all the indicators up because I think they can all play a role in helping us read the MACD. All right. But the bottom line is when we get a cross of the signal line, it does depend. When that cross takes place, is it above the zero line or below the zero line? Now, all the ones I'm going to talk about today are above the zero line, which means the trend is still positive, essentially. So we're trying to ascertain how important this crossover event is. All right. We have to look for signals because even though we're getting this downside move, it's taking a place as a part of a longer term uptrend because it's staying above the zero line, which essentially is showing that the 18 and the 40 are rising. You know, the 18 is above the 40 on that time frame and still rising. In most cases, that will correlate to a zero line. Meaning if we're above the zero line, then these lines will cross. Essentially, it's the same as a 1226 crossover, exponential. So I don't want to get into that kind of detail right now. What I want to explain is the different ways these crossovers take place. And I've found just looking at about a year's worth of weekly price action and about, 7 months of daily price action, I have almost every type of example that I wanted to give. So I really like that. When an indicator provides current market action, giving us examples that we want to see, I think it's a lot more useful. So let's just start out with this move here. We get a move to the upside. MACD's confirming to the upside. And then as it pulls back to the 18, the MACD crosses the signal line. Now, look at what we've got. We've got really good momentum in place. Okay. And the signal line crosses to the downside. I've gotten so many questions on this recently. And what I say is, look, because the ADX is showing strength, that's telling me I need to be ready for more upside continuation. Okay. But because the MACD is crossing over, I need to be a little bit more patient. And that in this case, it really helps me out because the crossover leads to, and what I teach in my course is, in the courses that I have, is that when we get this pullback like this that overruns, we should be looking for a test of this low, meaning we'll rally up, and a lot of times it'll be around the 50% mark, meaning we have a decline and then we'll rally up about 50%. This overran that a little bit. But then when it comes back and tests, that's the key. How does it handle the test? In this case, it went running right back through the low. So we don't get caught in taking this signal using ADX and saying, hey, the MACD confirmed here. We're waiting for a secondary entry. Essentially, we're looking for some kind of a double bottom and then a move back to the upside. But in this case, it went all the way down to the zero line. This was a zero line reversal signal. So that's what we want to be on the lookout for. In that case, we would have had an entry using a trend line break. Again, this is all out of my course, so a lot of details. I can't go into every detail, but the point is that when we get an overrun and we're showing good ADX strength, then we should be looking for, some kind of a second entry. Sometimes it might be a double top. Sometimes it could just be a turn from here. But we're giving it a little bit more time. All right. Now, in this example here, we had the pullback, and it looks like on the weekly, it just went straight up, boom, boom. But if you notice what took place, and this doesn't happen all that often, but it will happen this way, where we get the decline, it rallies up, and then the tests actually happen interweek. So I can see that if I go back on the daily chart, I can see that it came down, it rallied up, and then it tested right here. So this is the test, and that is this tail forming on the weekly chart. So it opened the week here, came down and tested 500, and then came right back up. Well, the rules that I teach using the intraday, the lower time frame, will help you see that you want to be getting in as this is turning back up at this level. And so you wouldn't miss this signal. It would just tell you, look, we don't want to take the gap up. Right? The gap up here, we want to wait for a test and have the second entry. Same concept when you get that crossover signal. Now, in this case, we got another crossover signal here, and it just went straight down and then rallied up. I mean, one of the things I look for when I see a big drop like this in an uptrend is reverse divergence. So we get a downside crossover that has a lot of strength, but if you notice, it actually went to a lower low in MACD, even though price made a higher low. So what I teach is that this is a hidden divergence or a reverse divergence, and we want to be on the lookout for this in situations where the trend is up and we get kind of a sharp pullback. All right, so that actually signal takes place here, but then look what happens again. We get a rally up and then a pullback, and this makes another lower low. It actually drops and makes another lower low, and this is making a significantly higher low. So what's our bias? Our bias is to the upside again, because this is a hidden divergence again. So we got back-to-back signals of hidden divergence on these pullbacks, and we wanted to be on the lookout for that. All right. Now, let me just give you another example that is more likely. So let's look at this crossover. You see how we got the crossover on the daily chart? Well, first, let's start with this one. You see how this dropped and we got a pretty sharp drop here? When I see this after it crosses above the zero line like this, so here's zero. We're trying to start a new trend. The first time we get a crossover and it comes down and tests the zero line, I view that as a bullish signal. This is a zero line reversal. It's the first time you get the downside crossover and you're close enough to the zero line that it's still acting as support. If you notice, we went up, came back, and it tested the low, and then it took off. Same sort of concept, but it's using that zero line as a springboard. All right, now I'm going to give you one more example. Look at this move. We get a move down, we cross over to the downside, we rally up, we test this high. Now it does get through the 50% retracement. Usually it's a 50% retracement, but look at the way this plays out. It pulls back and tests the low. And that's exactly what we're looking for when we get a downside crossover. Now, this doesn't have the great momentum in place, but the concept is still the same. We don't want to take the first signal coming back up when there's a downside crossover. We get a rally up, a move back down. This is a successful test. And then as we move back up, we could go down to a smaller time frame like an hourly to get a signal, or we could wait for this to come back up through this high to signal the next buy signal. All right. So let's go ahead and give you some real-time examples of some pretty interesting patterns right now. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. Okay, so I've switched to my 5-chart layout. Again, monthly in the bottom left, weekly, bottom right. Got a daily here, got an hourly here, and then I've got an extra weekly chart with the zigzag, relative strength, and the RSIs. All right. Now, we've got NVDA up. All right. Now, look at what this pattern looks like. You see this same situation? I want to make sure you understand this, though. We've got this initial drop, and this is the crossover to the downside. All right. But we make a higher low in price here, but we also make a higher low in the MACD. You see how this is not the reverse divergence pattern we were talking about when we were looking at the S&P chart when it came down pretty hard. All right. So because of that's the case, we're not really looking for we're actually looking for a retest. And that's what happens. We come up and then we come back and test this area. Now on the retest, we show this reverse divergence signal. All right. So then when this happens, when we get down into this area, what I like to do, so there's a couple ways you could play it. You could just draw a trend line on the price pattern of the weekly. But the other thing you can do is go down to the daily chart. And if you notice what took place, so this is the secondary test of that support. We had a move to the upside, and then we had a pretty definitive test, rising 18, rising 40, and a pinch play above the zero line. Pretty crystal clear buy signal as this is coming up through to the upside. Now, what this does is that in an environment like this, where I've been trying to tell guys, my subscribers, to be a little bit more careful because we have a higher volatility environment, to maybe get a little bit of a better entry, play off the weekly, daily, see if you can't, minimize risk. You enter here, you're using the risk off the daily chart, and then you've already taken a profit. You could already go to a break even, and then we can see what this wants to do. That's if you want to trade it. All right. If you're looking at a bigger picture, I think it's going to take more time. But using these techniques with the MACD and recognizing these downside crossovers can actually be opportunities, I think is a really good thing to be on the lookout for. Now, look at this LLY. So we've got Lilly, and it's trading more like, one of these AI stocks. All right. I mean, it's got the same look to it on the bigger picture, had this slashing move to the downside. That was a higher low in price, and it was also a higher low in MACD. So we're actually not looking to play this reversal. Now, it ends up making a move up and then coming back down. Now, obviously, the way this snapped back, maybe you wanted to play this, but I would have waited. And I'm looking for this to pull back and form a higher low. But if you notice what happens, we make a reverse divergence where this makes a lower low and this makes a higher low. So we can again go down to that daily chart, be on the lookout for a signal, which I don't actually think has materialized yet. We need a little bit more strength in this. Now, one of the things I do want to point out, because this has taken so long, we have a low ADX condition in place. We've been low. ADX has been low for quite some time. So I probably would be looking for this to break to the upside, get through, maybe get towards that 950 level and get through these last three highs on the daily chart. And that would be kind of the signal. But the point I'm trying to make is that we've got a reverse divergence pattern through the downside crossover. So instead of it looking like a sell signal, it's actually, because we're in a strong uptrend, we're actually still looking for buying opportunities. All right. Now look at this BTC, Bitcoin. What I want to point out is that we have this move where we made a move to the downside and we got a crossover. So what are we looking for? We're looking for it to move up and then come back down and test this low. Well, when it came down and tested, it just went right through it. And it confirmed. So we made a lower low here and a lower low here. So no reverse divergence. So what do? We wait. So we get another move up and then we come down and we make another new low, right? And now we've made another lower low here. Convergence again, no divergence, convergence, right? Now we make a rally up, pull back, and this makes a lower low, and this is making a higher low. All right, now all of a sudden we can start looking at this a lot more closely. If you look at where I started talking about this, it was as this was making a higher low. Over the last few months, I've started to bring this up on a regular basis. This is the first time in quite some time looking at the monthly and weekly where we have a legitimate setup with the low ADX condition and a MACD sitting on the zero line. You can draw your trend line in and look for entry. Okay, let's go to the QQQ. I want to start going through a few of these patterns that have set up in the indexes as well, because look at what's taken place here. We just created a reverse divergence in this pattern. Okay. Now, the problem with the QQQ, in my opinion, is we don't have this real strength. I mean, yeah, the buyers are stronger than the sellers, but they're not that strong. And if you notice, the blue line, the ADX line, is staying below 25. Even though this keeps moving up, we're just not getting the kind of strength in the ADX that we really want to see. So I have a feeling we need to get through this big round number at 500 to get things going. on this specific index. I don't think it's quite ready. And we also need to keep in mind that on a relative basis, this is not keeping up. You can see that we've upticked in price and this is actually going down. So it's not outperforming in this last couple weeks. So got to be a little bit more careful with this, but we do have a reverse divergence signal. So we can be looking for a little bit of strength on the daily. I just don't see it quite yet. Now look at what's taken place on the IWM. This is what we've been watching for. And that is the improvement on the weekly chart. Okay, we've gotten starting to see signs. It's coming back above the moving average. Now we need a little bit more definitive because we want that moving average to start rising as well. And I think for that to take place, we're going to need to see kind of a big green bar on the weekly. And I want to see the green DI break out again. I'd like to see this make a higher high. Love to see the red DI drop. Also want to see better volume action. Right now, the volume really isn't that strong this week. I mean, I think if we're going to take this on, we need to go to a new high with a big green bar, get this breaking out, get some volume to show up. And then I think you're going to see this relative strength really start to kick in. But big base formed, really nice longer term pattern. We just need to see some strength in the near term to get things going. All right, let's look at GLD because when we talk about gold and this massive breakout, when I talk to my institutional clients, I kind of refer to this as like the beach ball out in the ocean. It's gotten to a point now where it's beyond the waves. It's not really the chance of it coming in with the waves right now and giving us a pullback or getting smaller and smaller. You notice every time it tries to drop, it ends up being really resilient and keeps moving to the upside. So when we get to that point, I think you got to look for the individual names that maybe could kick in if gold keeps going. I think this is a little too far to be a buyer of this specific index or ETF, but I think it's a very, very strong sign and very typical of when gold is breaking out of a big base like this. I mean, this is a huge, it almost looks like a big, huge cup and handle inside of a cup and handle. And so we just want to recognize the strength and realize if we're looking for a pullback back to the 18-month, it's probably not going to happen. I don't think it's going to happen until it's over, until this move is over. All right. Okay, let's look at ATOM. So we're showing this move to the upside, very dynamic move to the upside and pretty good volume action as well. It has caused a cross of the 18-week. All right. We did get a green bar cross of the 18-week. However, when I'm looking and I put out my research on Wednesdays, I put out a list of stocks that I think look really attractive. My starting point is the monthly and the weekly show the potential for something meaningful. And then I want to find stocks that are doing this on the daily, meaning I want to have this bigger picture wind behind my back. In this case, kind of the wind is in my face because I've got a declining 18-month. I know that's probably going to act as resistance as we rally up. The same thing here. We've got the declining 40-week. We've got all this resistance up around 5. So yeah, could there be a trading play? Absolutely could be a potential trading play. And if I was going to do this, I would probably look for this to pull back a little bit more, look for a setup on the hourly, and then maybe play it up to resistance up towards that $4.75 or $5 area. But you got to be pretty nimble, I think, if you're going to play this. Okay, let's look at MDT. Now, it's kind of interesting because healthcare is very spotty. Some stuff looks interesting in the healthcare area and other parts not so great. So got to be a little bit more careful on these stocks. But when I look at this pattern, it does look, and I think this is one of the more attractive long-term reversal patterns that's out there right now. A big inverted head and shoulders pattern has developed. And I think if we can cross up through 90, that would be really nice. What would be good is if we got a little bit of a dip on the daily, but you could be watching for kind of like a trend line break, a little bit more definitive trend line break because we have a zero line reversal and a low ADX. That pattern is right out of my course. All right. Let's go to NDAQ. Now, when ADX is in this position and it's starting to turn down, I'm typically looking for a little bit more consolidation. Now, it's possible this will turn up and go from here. It's not really completely rolled over, but we've got some signs of contraction in the DI lines. I would prefer, because this is extended on the monthly chart and it's a little stretched away on the weekly, I would like to see this consolidate a little bit more, the daily. And if that happens, we're going to have to wait for earnings. So don't know that I'd be as interested in this prior to earnings. I might let this consolidate into earnings and then see if it triggers on earnings. Okay, UAL, big, huge breakout. You can really see it on the monthly chart. Huge breakout here. And it's really just a big ascending triangle pattern with a low ADX condition on the monthly and a low ADX condition on the weekly, and now it's starting to kick in. Now, because it's up so many weeks in a row into the breakout, I'd be looking for some kind of a pullback a little bit closer to that 60 level. I think that's what I'd be on. I'd be pretty just watching for this to come down. See maybe if you can't get an RSI signal on the weekly. That's probably your next setup, is a weekly RSI buy. You could be looking for that on the daily as well, and see if it sets up that way. All right, let's look at WYNN. So I like the bigger picture pattern. You see how this is really starting to turn things around. The MACD on the monthly trying to get back through the zero line. Some signs of life, some signs of a turnaround developing. But again, we've kind of shown this strength, but we haven't quite turned the corner. If you notice, if I draw my trend line in, now this made a lower low, so I can use this as a trend line. It's just hitting the trend line. All right. Now, the good news is we're showing a lot of strength on the daily, so we could potentially play this and maybe, again, look for an RSI buy signal on the daily chart, potentially with this strength, and then you can anticipate the break of the downtrend line. I still think it's a little bit early. I think it needs to develop a little bit more. It's possible this will re-break the 18 day, and you can see that the MACD is actually crossing over, so you don't necessarily want to be on the lookout for the first signal on this one. Thanks for watching today. If you do have any stock requests, send them to stocktalk@stockcharts.com, and I'll try and get it in on next week's show. Also, if you want to learn more about some of these techniques, go to my YouTube channel called Invest Like a Pro. Have a great week. We'll see you next time.